Hello, welcome you all in my YouTube channel, Mind the Investment. Today we are going to discuss about risk-free investment, which will give you a high return or good kind of return as your investment. Here I am considering the risk as very low. So we are going to discuss about the schemes which I am going to share you. So I have taken out after my research 6 schemes are available in the market which will give you a good return with a less risk. Okay, that is first one is the public provident fund, then risk free mutual funds. Yes, risk free. Which there are many mutual funds which are having investment in the government securities and bonds, so there is very less risk in that market. Post office schemes which will give you the return more than the banks and NBFCs. FD and RDs, fixed deposit and recurring deposit, very usual in the market. Saving account, last option of the saving, and the higher dividend paying stocks, which is my favorite one. So now we are going to discuss one by one, which start with the public provident fund. This is the 15-year scheme, okay, which is risk free. Also you have option to extend after 15 years also. There is return is very fixed and your money is deposited to the government. Yes, interest range is normally 7 to 8.9. Currently interest rate is 7.6, and normally its return is higher than FD and RD returns. Yes, and maximum investment allow for a year is 12 times you can deposit the money. Maximum amount to be deposited is 1.5 lakhs per annum. You can increase the amount, but this will be extra amount would be considered as a taxable amount. Premature withdrawal in PF accounts is normally not acceptable until 5 years. Only in the case of emergency or life threatening diseases you can withdraw the money before 5 years as well. Now we are going to talk about the risk-free mutual funds. Yes, there is many mutual funds in the market which is used to be a debt or gilt funds. They are having very less risk because all the money which you are going to invest in a government bonds and securities. The type of investment, yes, government bonds, commercial paper, debentures and securities. The best part in that you can choose your investment term. It can be a short term, mid term and long term, because most of the mutual funds are debt funds are having no exit load. You can take out your money anytime. Also many of them are giving the debit card to the customer so that they can anytime use their ATM card and swipe the card and get the money. So that is the best part in that. If you are not needed the money, you can use it for long term or mid term. Normally return is from 6 to 12%, and if market is going normally, there is no much movement in the market, so you can expect 9 to 10% return per annum, which is very good as compared to the other options. Now we are going to talk about the post office schemes. Yes, normally they are giving the much more higher rate of interest as compared to banks and NBFCs. So if you are going to use any saving account or any FD, so it's better you can go with the post office schemes because there is good returns. Also the investment amount is very less as compared to the other market instruments. You can use in money as low as 10 rupees, so this is good. If you are only able to save less money, you can go with the post office schemes. Normally I'm talking about the return, so there is multiple schemes which will give you a return. Comparatively the return is higher than other banks or other schemes returns. Yes, you can see the schemes and their returns. I'm going to prepare one fresh documentary video for post office schemes because many people has already also requested for that, so I will prepare after some time. Now we are going to discuss about fixed deposit and recurring deposit. This is very popular scheme since many years ago. Also people are usually go with the FD and RDs. This is risk free first thing, and your capital get protected because once interest rate has been decided and you start your FD or RD, it will not change throughout the life cycle of that investment. So that is the good part. If market is going up or down, interest rate is changing, it will not affect your investment which you have already done. Normally interest rate between 6.5 to 8% or 8.5 also. Now many banks is giving 8.5 as well. There is one clause in that premature penalty is there. If you are going to withdraw money before the maturity period, you need to pay some penalty, or may not be, depends on the bank and the scheme. That is also there. Now we are going to talk about the saving accounts, which is the last option of the investment. Nobody is thinking that saving account is an investment, but yes, this is also an investment. If you can consider that the liquidity part, very liquid funds, you can go anytime in your bank and take out the money. In terms of anything, interest rate change from 3.5 to 7%. Yes, many banks are giving high rate of interest in saving accounts. So I will tell you ki better to prefer the high rate of interest in saving accounts, because your money in a liquid form and you are getting the high return. That is very very good. So always prefer that. Good for very short term. Yes, you can take your money for the shorter period of time. Normally people are doing that only. There is no penalty for withdrawals. Yes, you can take your money anytime. Multiple instruments available in the market, so that you can take out the money or deposit the money anytime. Okay. Now we are going to discuss about high dividend paying stocks. Yeah, there is many stocks which will give you a dividend which is higher than the normal returns of FD and RDs. Okay. So the best part in that dividend is they are the tax free. The dividend amount which you are going to get it is tax free. You need not to pay any tax to the government. Yes, this is little risky because the stock price may go up or may go down. So this is very crucial when you are going to select any stock. You must be very curious ki whether how the stock is performed, what was the past performance for that. So you have to be very careful about it. Also, please plan what you are going to invest and how much dividend you are going to get it, because many companies I know, they will give you the return between 5 to 10% easily per month, per annum. So that is good, that you have to select the stock with the very very careful manner. Okay. So also that minimum return is 5% and maximum can be more than 100 also. Yes, I know my friend. One of my friend has invested in one of the stock in 2008 somewhere, and now he is getting the dividend which is higher than what he has invested on that time. So this is the biggest thing. There is many stocks. I'm going to tell you few like Infosys, TCS. They're giving the good kind of return. Right now, Infosys is a good, because the stock price is somewhere 700 and they are giving annually dividend is 30 to 40 rupees. I have already prepared the video for that. I will share you the link. You just go through with that. You will get the idea how exactly it will work. And this is the good option that you can choose for the safe investment. So this was my part, friends. Now if you like the video, please like it, share with your friends and family colleagues, so that they will also get the idea how it's going to work. And if you have not subscribed my channel till yet, please subscribe the channel and do not forget to press the bell icon so that you will get the notification going forward. This was my part. Thank you friends for watching the video.